Hello, everybody. I'm your host, Derek Bird, here at StopStrugglingNow.com. And today, we're gotta talk about it. You gotta recession-proof yourself. I haven't had a video like this in a few months, but we gotta talk about it. The Fed is putting money into the markets. The bond market is dropping. That gold, silver, precious metals, and other protection is gonna be needed. We're gonna talk about it. Welcome, everybody. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. That's right, we need some protection. Recession-proof yourself. We're gonna talk about it. I'm gonna show you on the screen shortly what we're talking about here. But first, don't forget your merch. That's right. Go to StopStrugglingNow.com and go see the SSN merchandise link, please. What we're having is a global meltdown, and now we're having a USA meltdown. Sure, it's going up, it's going down, but it's being manipulated, that stock market. Stock market isn't real life. A lot of people have jobs. There's things that move, like boats, planes, trains, automobiles. This is the economy, the real economy. When they're printing money, you have to understand that means things are gonna cost more in the future. That's why it goes up, but you're not getting paid anymore. So we're gonna talk about it on the screen and then what we can do about it. So stay tuned. Let's go.
Let's get into this today. Recession-proof yourself. We've had this talk before, but today it's going to be a little bit different because as the stock market goes up and down, which, by the way, most of Americans are not in the stock market, but you get to take a little advantage when things happen in the stock market. For instance, yesterday or the day before, stock market's been going down. So the Fed says, hold on, they're going to have a meeting in roughly 2 weeks to discuss their Federal Reserve rate, as they call it. Well, because the stock market lost like over, 3,000 or 4,000 points last week, and because it lost like another 1,000 points, and because it was heading for another 1,000, they decided to say, oh, we're holding an emergency meeting. We're cutting the federal fund rate by 0.5. Some of you may say, what does this have to do with recession-proofing yourself? Well, when this happens, ordinary citizens can sometimes gain a little advantage because if you're looking for a house and you need a mortgage or you're going to be refining, now is the time to start thinking about all of that because now your interest rate could be lower. Your refi rates could be lower. Same with a car, automobile. You can possibly refi for a lot less money now, which means more money in your pocket. So that is the advantage that you can use even though you're not in the stock market. And if you are in the stock market, great. But ordinary citizens get to take advantage of these type of situations. Now, you have to keep in mind, you have to prepare for a 2, 3, 4, 5-year downturn because anytime this has happened in the past, the latest event happened in 2005, 6, or 7, the economy went south for 2, 3, 4 years, and therefore if you had a house that you bought before it happened, you wanted to have the lowest interest rate possible. You want it to have the lowest mortgage rate possible because you don't know if you're even going to have a job. You don't know what's going to happen. So that's why we got to recession-proof ourselves. And one of the things, I did a video over here 4 or 5 days ago, is streams of income. You have to add multiple streams of income right now. I've been talking about this for a year and a half. And adding additional streams of income, even if it's $20, $30, $50 a month that you make while you're sleeping, that can go a long way in case of a problem. Think about this, ladies and gentlemen. When you wake up in the morning, are you able to just do what you want to do. And what I mean by that is most people have a job. So you have to wake up and you say, okay, I'm going to go to my job. But when you arrive at your job, do you not understand that if the company has a problem with profits and revenue, that they have to cut people? And at any given day, you do not control your destiny. Your boss could walk in and say, hey, you know what? I'm sorry. We're going to have to lay you off. I'm sorry. You're going to have to be fired. Are you prepared for that? That's ultimately what the game of life is all about. Are you controlling your own destiny? Because a lot of people think that they're going to be happy when they wake up and say, well, I can do whatever I want. Well, right now, are you able to wake up and have your own destiny? If your boss walked in and said you're fired, are you good? That's really the question. That's how you recession-proof yourself. If you're recession-proofed, then you don't have a problem. Your boss can walk in and say you're fired, you're laid off, we don't need you for 5 months, whatever the case may be, and you'd be fine. You're going to say, okay, I lost a stream of income, but at least you're not going to be devastated, where you're going to have to jump off a building or something, where you feel like you want to take your life like some people do. At least you'll be prepared. And that's what I'm saying by recession-proof yourself. So get your streams of income. And you can watch the previous video. Some of you are not experts online. Some of you dabbled. But get streams of income. There's ways. It's free. It doesn't cost you anything. If you want to up your game, of course you can pay for ads and pay for, advertisements all over the internet. But that costs money. If you don't, you can start with little to no money. And so therefore, let's move to the second thing I did in the last 2 weeks, is when I did these videos of why pay more taxes and create your own banking system. I'll have links down below for these videos. And create your own banking system. If you have your own banking system already, that means you already have your whole life policy that makes dividends, that earns 4% regardless of the stock market. You heard me, 4% regardless of what the stock market does. Safe, tax-free. You need to find out about this, because when you have these down days of 2,000, 3,000 points in a week, you're sitting back with your feet up on the couch going, I'm glad I'm not in that. I'm still making 4% on my money or more, because some of the whole life policies you have dividends. So these are the kind of things that you have to think about and position yourself for when bad times do come. And we're going to talk about when bad times do come, but I want you as an ordinary citizen to understand what's going on. And I'm going to go to what they call repo operations, aka quantitative easing, aka QE, aka the wealth killer. That's what I'm calling it, and that's what it is. AKA printing up money out of thin air is what it is. You have to understand, it's just like the Monopoly game. It's pretty simple. Mostly everybody's played Monopoly. You can rent when you land on somebody's property. You got to pay rent. What happens to all the players as one player starts accumulating the properties where all the players have to pay rent? Then what happens when all the players are out of a job, which is basically what the Monopoly game is? You're out of a job. You have no way. You don't have those extra streams of income to bring cash back, because next time you land on that property and you don't have any cash and can't pay for it, you're done. So Monopoly doesn't have that extra stream of income where you can get that extra $400 or $500 or whatever you're going to need. So this should teach everybody that once the wealthy have everything, where does that leave you? Nowhere. You're going to be without any lifeline. You're not going to have nothing. Don't you understand this? This is not a capitalist society in true form. What this is, a capitalist society for moms and pops store on the corner, moms and pops operations, the small business person, it's a capitalist economy. For the wealthy, they get to play games. They get to call up the Federal Reserve, and the Federal Reserve get to have meetings with banks, quote unquote, Bank of America, Wells Fargo. They have meetings and they discuss what they're going to do to help out the wealthy. Because otherwise you would not be printing up money to put it into the stock market. And now Exhibit A, March 3rd, okay? This right here, you can see 600.627, which is 627 million. They bought up 627 million worth of treasury. And you might say, hey, Eric, I don't know what you're talking about. Well, treasury bonds is what what people invest in, because it says, hey, I'll take that 1% for 1 year, or I'll take that 2% for 10 years, and you buy up bonds, which helps fund America, so to speak. That's the way I look at it. So people outside the country, in Europe, in Asia, in South America, they'll buy bonds or treasury bonds in the United States, which invest in America. But here's what happens. When that Federal Reserve rate goes down, bonds go down, and yesterday the bond market went below 1%. In other words, who in their right mind would invest for 10 years for 0.96, not even 1%? Who would do that? Exactly. And let's put it in another perspective. The 1 month yield. In fact, here, let me go to the screen. The 1 month yield is more than a 10-year yield on your money. Who in their right mind would put in 10 years? So the Fed has to come to the rescue. You see this headline right here? 10-year treasury yield falls to 3-year low. 30-year rate hits record low. In other words, who's going to put their money in the United States of economy when the 30-year bond, treasury bond, is less than the 10-year, less than the 1 year potentially? This is absolutely insane. So they rig it and they go 627 million to prop up the bond market. Imagine if they didn't print up money and buy these. Not only that, that's just a starter for you. Look down here. 100 billion. 69 more billion goes to the Treasury. 30 billion goes into mortgage, which goes to banks or Wall Street. Again, you're not getting none of this money. Imagine if the Fed all of a sudden woke up and dropped on, all the citizens of New York City, let's call it 10 million people. Imagine if they all rolled down and said, hey, all 10 million people, we're just going to drop you. Each of you, here's $1 million. You'd be like, what the hell if you lived in Miami? You'd be like, what the hell if you lived in San Francisco? That ain't fair. They can pay for everything. They got a free and clear house now. They have free and clear cars now. They're renting everything. They don't have none. They can pay all their taxes. They have everything paid for how many years? You would think that's what's going on, ladies and gentlemen. Mom and pop stores aren't getting this kind of money. They're not getting anything back for them. Who's going to bail all this out? And by the way, ladies and gentlemen, when they're printing more money, think of Monopoly. Imagine you're the winner of Monopoly. You took everybody's money. You have your pile of cash sitting here, and one guy over here who's a 1%er, who is JP Morgan Bank, who's Wells Fargo Bank, they're playing with you, and you say, hey, I got all your guys' money now, and they go, hey, we just talked with the feds. We're coming back in. They just handed us about $100 billion. We're back in the game. If you were holding the money and the winner of the game, you'd be like pissed. You'd be like, what are you talking about? There ain't no more money. They're like, oh, no, don't worry about that. We just printed up some more money, and we're back in the game now. And by the way, we have more money than you have. And you're like, what? Wait a minute. And now when they start landing on your stuff, they can pay endlessly. Meanwhile, that stack of cash you had is worth a whole bunch less because the money supply just got increased. Ladies and gentlemen, do you not understand the end game? This is why you got to get your piece. A lot of people out here are going, yeah, I make $75,000 a year, $100,000 a year, $150,000 a year, thinking that all is good. Well, nothing's all good, because when there's only a limited number of people who actually have money and you have the majority of people who do not have money, your bills are not going to get paid either, because people aren't going to be able to pay you. Let's get real. So, not only did they do the 100 billion, not only did they do the 627 million, this is all March 3rd. They did another, they accepted 20 more billion on March 3rd. So when you start doing 20, 120, we're at 100 and almost $21 billion printed up, given to Treasury to buy stocks, to buy bonds, to help out with liquidity at the bank. And that ain't enough, because the day before, there goes another 2.5 billion on March 2nd. Here goes another 53 billion on March 2nd. Are you not understanding? That's what, 170 billion, 180 billion? And then you go to last Friday when the economy was supposedly, allegedly, maybe coming back a little bit, but it was dropping after they tried to buy back in again. Here goes another 2 billion. And then on Friday, you say, hey, give me $15,000 of my money today. And they say, oh, wait, no, you can't take your money. Come back. We got to make an appointment. But yet, look at all these hundreds of billions of dollars that they're tossing at these people. That ought to scare you. That you should know not to keep your money in the bank. Wholesale Life, Mass Mutual, Penn Mutual, Guardian. These companies have been around for over 100 years, giving people a percentage on their money, and this is why the wealthy keep their money there. And then they play the game of the stock market because they get free money from there. Ordinary citizens, 200 million people, 150 million people are sitting here working or running small businesses. And you're getting left behind while they're printing up money out of thin air, and your money is worth less. So when there's going to be a bank run, don't expect to get your money out of a bank. So therefore, what do? You buy precious metals. You heard me talk about this before, but keep in mind, precious metals is cold storage, as I call it. That's where it stays. But if you want to recession-proof yourself, you have to have a little bit of precious metals. You're saying, what are precious metals? It's gold, silver, platinum, palladium. All right? It's pretty simple. Gold is at $1,600. Let's call it $1,650 an ounce. You can buy a tenth of an ounce for $170. So if you want to go that route, buy gold or a full ounce. But I'm not recommending that you say, hey, Eric, I got $100,000 sitting in the bank. I'm going to go buy $100,000 worth of gold and silver. I would not say that, because it's cold storage. It's not liquid. You have to exchange gold, silver, precious metals for money. So in other words, if I have an emergency, I can't just I can't grab, a couple hundred ounces and go down and get some money. Of course I can from the silver, gold deal or whatever, but it's a lot. You have to transfer them into cash, into a usable commodity. And so therefore, that's why you don't load up on it like that. You want to keep a little bit, like 5%, 3%, 8%, 10%. Every now and then, purchase a little bit. This is just a hedge in case things really do hit the fan. And now you have a situation where in like 2012, 2013, where gold could be at, I don't know what the number was. I'll have to look it up, but you can probably look it up. I should probably look it up anyhow just to find out. But I would say probably around 1,800, probably somewhere like that. Silver around $40 an ounce. So all those people who had a little bit of gold and silver, you wouldn't have mind selling it, because you would have said, okay, I bought it at that time probably at 10 or 12 or $7 an ounce. So it goes up to 40, 45. You might think about selling a little bit of it. So you're hedging against inflation. You're hedging against a real bad downturn. And if you have over time, over the last year or two, got an ounce here, 2 ounces there, 5 ounces there, 10 ounces there, It just adds up over time where you could actually have, 100 ounces before you know it. So that's why I've always said, go to Apmex. If you order over $99, it's free shipping, but they do charge tax. But order over $99. Then, or SD Bullion, same thing. They over $99, free shipping. So those are the two. I'll have a link down below. Now, I'll get back to the repo and the Fed rate, because when the Fed's doing emergency rate cut, I have already highlighted just what I've illustrated before. This is the largest reduction since 2008, which was the height of the financial crisis. That ought to tell you something. The Fed did an emergency rate cut. They weren't supposed to meet for another week or two. And yet here they showed up because the stock market was going down. That ought to tell you something. Everybody who's these pundits on TV are going, well, they just did it because of, well, cautionary reason, blah, blah. Come on. We've been here before. 2006, 2007, 2008. Come on. Don't stay asleep. All right. Now, what I wanted to get to was people out here keep hitting me up because they're trying to improve their credit score so they can get a loan or car. Ladies and gentlemen, this economy is not the best economy ever. You can get a home, you can get a car with damn near any credit score. All right? Even stated income loans are back. So it's not as bad as you may think. The only thing that is bad is there's one thing that does stay the same. If you have bad credit, meaning 620 to 650, I'll show you this list here. Your interest rate is going to be a lot higher. So that's the only drawback with having a lower score. Right now, you can still do an AU trade line to get your FICO score up so that you can fall into another bucket. So on the screen, I'm at my FICO, and as of March 3rd, you can see what the rates are. And this is obviously going to drop because the Feds just did 0.5 rate cut, so 50 basis point rate cut. So these are going to probably come down like 0.2, something of that nature. So if you have a credit score, you can see here 760 to 850, which there's only a small percentage of people who have a 760 to 850 credit score, but they could take advantage of a 30-year fix for 3.071%. And that would be a $1,276 monthly payment on a $300,000 house. In most states in America, take away the West Coast, well, take away California, Arizona, Nevada, you can still do it. Take away New York City area, and take away like Jersey and some of those cities, Miami. Take away like these big cities and some of the West Coast. You can still buy a very nice $300,000 house and a mortgage of $1,276 plus tax or plus HOA, whatever. You could have $1,500 a month, $1,600 a month out to paying per month. That's reasonable. And if you had your game plan right and said, hey, I need to make some extra money, could you imagine having streams of income coming in where you're actually making $2,000 a month? And now you don't even have nothing to worry about. Now you're making money at your job. You're sitting here having extra streams of income. Now, if there's a bad downturn in the economy, you don't have to worry about losing your home, which is what happened in 2007, 8, or 9. People were not prepared. When they lost their job, now they're 6 months behind. Now they're 8 months behind. Now the banks are sitting there saying, well, you can just stay there until we can figure out what to do. So modification loans, all this crap started coming out. But eventually, there were millions of homes sitting on the market. There were condos in Vegas that you could buy, yes, in bad neighborhood, but still $10,000, $15,000 for 1 and 2 bedroom condominiums in North Las Vegas. And everybody lives in Vegas, they know what I'm talking about. But still, to right now, everybody's happy. They can sell those same condos for over $100,000. They rent them out for $1,000 per month. This is why real estate is very powerful. And if you can get your hands on some real estate where you have income coming in, you're going to be recession proof. Because now you have another vehicle. When recession hits, people have to sometimes move out of their homes. They move to a place where they can rent. Again, think about the playbook that you can utilize, and you don't even need any real money. But if you boost up your credit score, everybody says, okay, let me get you guys, I won't get off track on this percentages, but let me get you something to think about. Most people who talk about real estate don't give you the basics. When I buy one property, sure, I can use an FHA loan, get 3.5%. That's my primary residence. Now, if I try to go buy another property, that's not my primary residence. I'm going to have to put down 20%. So don't get things twisted. People think they can just go out here and buy one, buy two, buy three. No, if you have equity in your house, use the equity to buy multifamily property. Now you have the income coming in from that multifamily property to pay for that equity line or that refi. But you'll have that additional stream of income is going to help you out in the long run. Now, back to this interest rate. You can see where this starts going, 700 to 759, 3.293%. And you can see FICO had a record. 703 was the record in 2019 for the average credit score. Now do you understand why they are not your friends? Because soon as when they come out with my FICO 10, less people will be above on average 700 to 850. And if you're not, look here, when you're under 700, it's 3.4. So a person is paying about $50 more per month, $600 more per year, because their credit score is roughly almost 80 points lower than the best you can have. That starts adding up when you start talking about 30 years. All right? And heaven forbid, when most people, the majority of people, are under 680 and you fall into this 660 category, now look, almost $150 more, and this is where they want you. Because $150, you start adding that up, that's $1,800 a year, and you start doing that times 30 years, you start seeing your wealth being evaporated. You can do the numbers. What is that, almost an extra $60,000? And heaven forbid, sure, we'll give you a loan if your credit score is 645. But it's 4%, and it's $1,400. Now you're almost $200 per month, more than if you had a great credit score. You see how this works? The lower your credit score, the more money they make. The more money that you pay, less wealth, less income in your pocket, and let's start the revolving door all over again. So this is why sometimes it's better to rent than buy. Sometimes it's better to fix your credit score and recession-proof yourself than buy. But over the next 3, 4, 5 months may be a good time. And by the way, whoever has equity in their home, I seriously suggest you get your home equity line of credit, and I seriously suggest you use some of it and buy a income producing property. What's going to happen to your home equity line of credit 3 months from now? If the feds do what I think they're going to do and they reduce their Fed rate again, your home equity line of credit, your company, your bank, whoever's going to give you that, they're going to reduce the amount that they will give you. And if you haven't used it, they will take it. Not take it as in take it away from you and put it in their pocket. What I mean is, if you have $200,000 available in a home equity line of credit, and the Fed did just what they did today, there's probably some people right now today that when they call up their bank and said, yeah, you know what, I think I want to get 150K on that home equity line of credit, they're saying, I'm sorry, we reduced it. You can only get 100 right now. And the only way they can reduce it is because they didn't use any of it. If you would have already taken out the 150, then they can't do nothing about it. They can take away the other 50 that's left over and say, okay, you maxed out now. We're not allowing you to take out any more against that. So if you have that ability, now is the time to recession-proof yourself. If you're a middle-income, wealthy person, there's no reason why not to take advantage of some of this free money coming out, because basically the lower we get to zero, we're only at 1%, ladies and gentlemen. We're basically in 0% territory because inflation is more than 1%. So this is why when they reduce it to this, all the wealthy people are, of course, borrowing money. Of course. Because inflation is more than that. They know right now today this is as foolish as somebody buying a treasury note, a 30-year treasury note for 1%. Why would anybody do that? That's stupid. Because inflation is more than 1%. So you're going to give somebody $1,000, so you'll get $1,001 30 years from now. Come on. Makes zero sense. But the only thing that does make sense is that now allows wealthy people to say, give me some more of that money, some more of that debt, because I'll make more than 1%. And even if I owe it, inflation goes up. So therefore, I rent to people, if we use apartment rental, I rent to somebody for $1,000 a month right now, but next year, I can raise their rent to $1,050. It's more than what I would even owe. I just raised it up 5%. So there's no loss here. So that's the idea. That's why the Fed reduces the rate. You got to understand what's going on here, ladies and gentlemen. You got to get in the game. You can't be on the sideline going, I have a job. That's good enough. I have my money in a 401k. Oh, I'm going to wait on this pension. That ain't good enough. You're not in control of your life. Any given day, your 401k can be stolen. Your bank, your money can be bailed in, stolen. Your pension, a company could say, oh no, we gave the money to a mutual fund, a hedge fund, and they lost the money, stolen. You have to understand what's going on here. This is something that has never happened except in 1930s when the Great Depression came. 2008, 2009 came, it was like a little, somebody had a mild heart attack. And it's just like that person who had a mild heart attack and says, I'm going to still smoke, I'm going to still drink, I'm going to still stay up late at night. I don't really care. In fact, I'm going to take drugs too. And you're sitting there going, didn't you just have like a mild heart attack like last week? That's what happened to the United States. They said, nah, man, so what? We'll keep going. Because the wealthy, they're buying planes right now. They're buying their little spot of heaven somewhere around the world. Because they're wealthy. They can do that. They can leave when it hits the fan. But how many of you can leave if it hits the fan? You got a passport? How many of you got a passport? And I'm not talking about the U.S. Virgin Islands, Puerto Rico. No, I mean places you need a passport. You got a passport? Get a damn passport. You might need it. Don't be caught. Because there's a worse thing that can happen is you can't leave the country and you have no way to get your money out the country. Your money's stolen and you have to live here. America costs a lot of money to live in. There's a lot of countries around the world that cost a lot less. So anyhow, that's my recession-proof rant today. So there's not much more to talk about other than get your things in order, because you don't want to be caught sleeping like the people in the Great Depression. You don't want to be caught sleeping like the people in 2007, 2008. You want to get everything in order. You know the rates are going to go down. So if you're going to buy a house, then buy a damn house right now. But keep in mind, you could lose home value if we go to 2007, 2008, 2009 territory. You're not going to have equity. So these are the things you have to weigh if it's going to happen, and more than likely it's going to happen because they haven't done anything to derail what happened 10, 12 years ago. So they just made it worse. And you don't want to be a victim, but you want to be able to say, okay, I can pay for whatever I have. So if you see your house going down in value, you live there. It doesn't really matter what the value of your house is. See, people get caught up in this wealthy people's game. You know, they want you to believe, oh man, my house went up 200,000, 300,000, 500,000. And my response is always, yeah, but you live there. You selling your house today? Then what difference does it make how much it went up or how much it went down? You're not selling it, so it's irrelevant. So you have to keep in mind with the right perspective. Because if you're saying, I want to get an income producing property, okay, then that makes sense. Refi your house, take out some of the money and do that. But if you're sitting there going, well, I got $300,000 of equity in my house, I'm like, great. And my next question is always, to all my friends and neighbors, I said, hey, okay, so are you selling your house? So then who cares about your $300,000 of equity? I mean, what are you doing with it? You investing in something? I mean, it's irrelevant. Just to sit there and look at it like at your bank account right now, you go to your bank. The rant's not over apparently. You go to your bank and you see in your bank account $10,000. By the way, 70% of Americans don't even have $1,000 in their bank account. So just letting you know, that's why these streams of income. But let's just say you go to the bank, you see $10,000 in your bank account like I illustrated before. On the screen it says 10 grand, but you walk in your bank and say, hey man, I want 10 grand. They're looking at you foolishly, saying, I'm sorry, we can't help you right now. You got to make an appointment, come in here later, do whatever, blah, blah, blah. That's my point I'm trying to make. Just because something looks like something on a screen doesn't mean that's what it is. Unless you actually have it in your hand, like precious metals, gold, silver, you have cash in a duffel bag. You better have cash in a duffel bag during this recession game. Because if they take your money, what you going to be doing? Your landlord doesn't care. Your electric bill doesn't care. So I'm sorry about this long one, ladies and gentlemen. This was more of a rant than the recession-proof thing. But I just want to let you know it's time. You got to quit playing. This is what Stop Struggling Now is all about. I'm just trying to keep you up on things because I know a lot of you are busy. You don't have the time. And I thank you for watching my videos and the support. So with all that said, please like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. That's why I have to present this like I have to present it. And get your LLC. Now, Opus Virtual Office is there for people who don't want to have their business at their home and you want to have a virtual address. You'll have a phone number. You'll have a fax. You'll have emails. You'll have somebody answering your phone line, which they can forward to you. All this is a tax write-off. There'll be a link down below. If one of you want to join and become an affiliate to promote Opus Virtual Office, because this will probably start coming into play a little bit more as people have to find streams of income. You want to be able to promote and potentially make money. I'll have a link down below how you can become an affiliate to promote Opus Virtual Office. That simple. So with that said, keep your head up, keep moving, and I'm out.